What if I wanted to borrow money for like a franchise for with another guy? Because my
Yeah,
personal finances are pretty good, a high amount. Do you think the SBA would even work with me on something like that?
there's ways around it. We can talk offline, but yeah, there's ways around it. So for what he's referring to, anyone listening on the podcast, there's actually the SBA has what they call a means test. So if you've got available means in excess of what the dollar amount is for your financing request, they will actually decline you because they're going to say, look, if you've got $1 million in your personal bank account, you came to us for $500,000 to open up an indoor trampoline park franchise. We're going to turn you down because you can just go to your own checking account and do it. Why should we have, basically government guaranteed, government subsidized money being provided to you to go do it if you could do it off your own checkbook? So there's ways to get around it. You basically just have to take the money and shuffle it back into your business and look poor on paper on the personal side, even though you own the business and you just move the money. There's ways around it that are legal and ethical. You just got to understand what the rules are. And that's where I help a lot of people.
Yep. I got you. So is there any other, you sound like you know a lot. Obviously you do know a lot about capital and about, you understand the finance stuff. A couple questions here. Number one, you keep going back to fintech. What is fintech exactly?
Yeah, so financial technologies. So what I have on the back end is I'm building out a whole technology-based ecosystem where here's the problem. If you go online, you look for an SBA loan right now, and this is kind of what I identified. It's a combo of my businesses now. If you go to like Lendio, Fundera, or one of these other companies, what is the typical process for an SBA loan with them? You give them a bunch of basic information. They take your information, they sell it to a bunch of banks, and you just cross your fingers that some of the banks call you, right? Yep. You don't like that as the borrower because you got no freaking clue what's going on. The banks don't like it because they get lead lists of for the most part, leads that are unqualified, leads that don't really fit in the SBA box, and we'd just be better off, going to get some unsecured lines of credit, some 0% credit cards, to start a business or whatever. And so what we're doing on my side is we've built out a platform using some existing technology where we can really standardize a lot of the data points that banks look at to approve a deal. So if you came to me, I know we're working on an overlap deal right now, a partner buyout, right, with your stuff. We're going to be able to take all the financial data, drop it into our system there, and with a couple pieces of software that'll actually scan the tax return, scan the financial statements, we'll be able to digitize a lot of the data. So when a banker gets the file, he's going to be able to see, hey, here's the revenue, here's the bottom line, here's this, here's that, and it's all done in one spot. And the benefit to the borrower is you only got to fill out the application forms one time. We have all the application forms digitized in our platform. And when we send the request out to multiple lenders, instead of the borrower having to go fill out application forms at 10 to 20 different banks to get an approval, they fill it out once, it's on our system, and then we just basically shoot it out to all the lenders that we think it'd be a good fit for. So it's just about using basic software, basic technology to, streamline, financial services, which is, really what we do, right? We're consulting with people, helping them get loans. It's a finance thing. So finance, technology, fintech.
Yep, that makes sense, fintech. And then I kind of put two and two together. I was
for the audience. Yeah, for the audience.
And then also there is a lot of money out there. Recently, I had a company come in here and they work with veterans and military spouses. Basically, there's a lot of money out there for grants too. Do you know anything about small businesses getting grants and getting other sources of money? I know that's not probably your forte, but I'm just curious.
A lot of that's going to be best figured out with, like a CDFI. There's a lot of companies out there, or not companies, but some of the SBA sponsored nonprofits are called community development financial institutions. So they basically just specialize in helping small businesses in the community grow, get access to capital, figure out really whatever they need. CDFIs are usually going to be the better resource for those because a lot of those are more localized. They're local to the state and city and local level. So you're going to really have the best fit as a small business owner, kind of going to your local SBA, your local CDFIs, or there's also CDCs, the Certified Development Corporations. You can reach out to them and just network with them, figure out what kind of resources are really good out there because there's so, like you said, there's so many grants, there's so many programs. Even if I tried cataloging them all, there'd be new ones and there'd be ones that expired by the time that we finished out the list. It just wouldn't be worth it. But yeah, I would recommend locally networking with CDFIs, CDCs, and probably your local SBA office to figure out what options are out there for you. Especially if you're a minority, a vet, a women-owned business, or any combination of the above. There's always going to be some sort of incentive or program out there for either extremely subsidized money or just straight up free money with grants.
That's a good point. So women, ethnicities, or veterans, those are the three big ones that can go out there and get plenty of money. I like that advice because, I don't qualify for any of those.
You're a white male non-vet, so you're out of luck. But I have a mentor. He would kind of poke fun at it. I mean, he's like, look, if you're if you're a one eye, one leg, a minority female veteran, I mean, there's a gajillion programs out there, and they'll just fork over the money hand over fist. So obviously facetiously, but it's just the reality. I mean, the thing is too, a lot of banks that I deal with, they will straight up tell me like, look, Josh, like if you've got a loan under this dollar amount, we're probably not going to bother with it. Not because it's not a good deal, but just, it's not worth our time. It's, it takes them the same amount of time to go underwrite a loan for $350,000 than it does $100,000. This is why I'll tell the audience, if you're going to the bank, ask for as much money as you can, because they're more likely to give you it. If you don't ask for it, they're not going to give it to you. One, but two, you generally don't have, you probably don't know how much money you really could use or need. So just go ask for more. But three, the more money they can fork over in the same transaction, the better, because I mean, that's what their job is. It's a sales role and it's based in dollar volume. But they've straight up said like, look, we will look at smaller loan requests if it's, a minority, a vet, or a women-owned business, because that's like the bank's directive. They really want to try to be able to help. And so it's really interesting. I've been working with a couple of business owners that fall in those sections, and they understand that. And it's funny because they say, oh yeah, all my other female friends or whatnot, or complain about how hard it is. And this other lady I was talking to, she's like, I laugh because they don't understand that these banks, these financial institutions, they have a directive to give out as much money as they can to minority, women, and vet-owned businesses. So if you fall in any one of those buckets, they're gonna give you way more attention just because of that.